Welcome to the Road to Retirement series. Hopefully by now you've been able to review routes 1, 2, and 3 because today you are at the next exit retirement. The Route 4 next exit retirement meeting is for members who are typically within about 6 months of their retirement date. Let's take a look at the topics that we will be covering today. Some of the topics that we will be discussing today are the benefit formula review, annuity options review, pre-retirement, health insurance, ready, set, retire, and post-retirement. We want to provide you with a quick recap of how to reach normal retirement and the defined benefit formula. If you've already attended any of the other pre-retirement meetings, you should have been made aware of these. Let's start with reaching normal retirement. Normal retirement means a pension benefit without a reduction. This is also determined by your date of ASRS membership. For those whose membership began before July 1st, 2011, there's more than one way to reach normal retirement. The criteria for normal retirement is 80 points based on your age and your years of service. The great thing about the 80-point system is that there is no age limit. We have members who can retire in their 40s with 30 or more years of service as long as it adds up to 80. They are able to take a normal retirement with no reduction. Then there is 62 plus 10 years. If you add 62 and 10, you fall short of 80 points, but it's still considered normal retirement. Or age 65 with any number of years. Whichever one of these happens first for you is when you have reached normal retirement with ASRS. The law regarding normal retirement criteria changed for new members as of July 1st, 2011, and that eliminates that point-based retirement of 80 points. Effective July 1st, 2011 and after, normal retirement is no longer includes the point system at all. The updated normal retirement standards are age 55 with 30 or more years of service, age 60 with 25 or more years of service, age 62 with 10 or more years of service, or age 65 with no minimum requirement of service. Early retirement is an option, but with early retirement there is a reduction in your monthly pension amount. If you are at least 50 years old with 5 or more years of service, you may retire without ever reaching normal retirement. However, a reduction is applied to your benefit depending on your age and your credited service. The closer you get to normal retirement, the less that reduction will be. Now that early retirement reduced benefit amount will remain as long as you are receiving retirement benefits. You can find early retirement increments on page 32 and 33 of the Road to Retirement Guidebook. Reaching normal retirement means you will receive your lifetime pension without a permanent reduction for being too young. You can find the formula on page 11 in your guidebook. This is a quick visual of the benefit calculation methods. Credited service is earned as contributions are credited to your ASRS account, or if you purchase public service. This also includes credited service from any previous ASRS employer, provided you never refunded your ASRS account. The graded multiplier is a percentage based on your years of service. The more years of service you have, the higher the percentage. The average monthly compensation is calculated using a method based on when you became an ASRS member, which we will examine in a moment. You multiply these three factors and it equals your pension benefit. For all salary calculations, the ASRS goes back 10 years from your termination date and takes the average of the highest 36 or 60 months of consecutive contributions within that 10-year time frame. This depends on your membership date. If your membership date was prior to 1984, both calculations are involved and will be using the highest. If members will be using a termination pay, this is included in the 60-month calculation method. Then ASRS will determine which is a higher calculation, either highest 60 consecutive months, including termination pay, or the highest 36 consecutive months. In order to use termination pay, the ASRS must receive contributions for the termination pay from your employer. Now, the majority of our members, they fall into that middle category. For those members who started between January 1st, 1984 through June 30th, 2011, the highest 36 consecutive months of compensation will be used. ASRS will go back 10 years from your termination date and take an average of the highest 36 consecutive months of salary, excluding termination pay. The final category is if your membership date is July 1st, 2011 or later. In this calculation, ASRS will use the highest consecutive 60 months of compensation in the last 10 years, excluding again termination pay. So let's look at this illustration. Based on the formula that we just talked about, which of these two members do you think will receive the higher monthly pension benefit? As you can see, both of these members are 55 years old. They both have an average salary of $4,000. Where the man in the blue circle, he has 30 years of service, and the woman in the green circle has 34 years of service. So who do you think will be receiving the higher benefit? Well, let's take a look at the answer right here. All right. The gentleman will be receiving a bucket of money, but the woman will be receiving a larger bucket of money. That's because anytime you increase any part of the formula, whether it be years of service, the graded multiplier, or your average monthly compensation, you will increase your benefit and your pension. Now we're going to review the annuity options that are available when you retire with ASRS. There are 7 options for you to choose from, but you can only elect one at the time of retirement. Consider these important questions when making your election. How much money do you want to live on when you retire? And do you want or need to leave money to a beneficiary? Page 9 of the Road to Retirement Guidebook will help you with a listing of annuity options. So at this time, we're going to ask you to pull out your personalized benefit estimate if you've received one from ASRS. Or you can also look at your benefit estimate that you have prepared for yourself through your secure account. But let's look at the top portion of this estimate, and you can look at it and follow along on the screen. You'll notice that there is a retirement date that you had entered either online or you gave to ASRS, and the beneficiary's date of birth. Now, based on the information that we provided you, the 3 parts of the formula that we use to calculate your monthly pension benefit is also showing here. If you did not have a beneficiary date of birth in your account, then the joint and survivor options are not going to appear on your benefit estimate. To see all 7 options in your online benefit estimator, you need to click the More Options button as you're progressing through the benefit estimate. Now look at the bottom portion of the benefit estimate to find your different options. The first option listed is Straight Life Annuity. This option pays the most to you, the retiree, but it does not guarantee a benefit for your beneficiary. With this option, you can name multiple people, a trust, or an organization. The beneficiary would be entitled to any remaining balance as a one-time payout in your ASRS account when you, the retiree, pass away. Now, generally speaking, your ASRS account is exhausted within the first 6 to 8 years of retirement. If you pass away after the account has been depleted, then there is no benefit to be paid to your beneficiary. The next three options listed are the 5, 10, and 15-year term certain options. You will notice the pension amount is being reduced as we move down the table. This is a temporary reduction based on your age. With the term certain options, the beneficiary is entitled to receive whatever is remaining of the selected term if the retiree passes away within that time frame. For example, if you take a 10-year term certain and pass away after 8 years, the remaining payments for your beneficiary will be for the next 2 years until the end of the 10-year term. If a retiree outlives the term, and we hope you do, and I'm sure your family hopes you do, then they pop up to Straight Life Annuity, and there is no benefit to be paid to a beneficiary. With these options, you can name multiple beneficiaries, a trust, or an organization. The final three options on the table are the joint and survivor options, 100%, 66 2/3, or 50%. With these options, you are guaranteeing a lifetime percentage of your benefit for your beneficiary. The higher the percentage, the more your pension is reduced. The reduction is based on the age of you, the retiree, and the beneficiary's age. You can only have one primary beneficiary, and it has to be a person. It cannot be a trust or organization. For example, if you take the 50% option, you will receive the amount that's listed to the member. Once you pass away, your beneficiary will receive the amount that's listed to the beneficiary, and they will receive that for the rest of their lifetime. There are age restrictions if your beneficiary is a non-spouse. You can find this information on page 19 of the Road to Retirement Guidebook. If you want to choose the joint and survivor 100%, your non-spouse beneficiary cannot be more than 10 years younger than you. If you want to choose the 66 2/3 option, your non-spouse beneficiary cannot be more than 24 years younger than you. There are no age restrictions for the joint and survivor 50% option. Since we are reducing your joint and survivor pension based on that beneficiary's date of birth, we will require legal documents showing proof of their date of birth. You can send us a copy via secure messaging through your My ASRS secure account. If the survivor you name is also an ASRS member entitled to their own ASRS pension, we already have proof of their date of birth and you would not need to send that. For those of you who are married, you will need to consider the spousal consent law when making your election. This law went into effect as of July of 2013 and is effective for all married members. It states that married members must choose a joint and survivor option and name their spouse as their beneficiary. If you choose any of the other annuity options, your spouse will have to sign a notarized waiver. You can find more information about the spousal consent on page 16 of the Road to Retirement Guidebook. The form is available under Publications and Forms in the About Us tab on our public website. Now, you may be wondering if you can ever change your beneficiary after retirement. Yes, you can. Just be mindful that spousal consent applies. If you elect a straight life annuity or one of the term certain options, you can change your beneficiary at any time and it will not affect your pension benefit. If you elect one of the joint and survivor options, you can change your beneficiary as long as the new non-spouse beneficiary meets the age restriction for the option that you originally chose. But your benefit will be recalculated based on that new beneficiary's date of birth. It is important to carefully consider the annuity options that you choose at retirement because you can't change your mind in the future. If you start out with straight life annuity, once your retirement date hits, you are locked in and will never be able to change to one of the other annuity options. If you choose any of the term certain or joint and survivor options, there are two circumstances that will allow you to change the annuity option. If your beneficiary passes away before you, or you get a divorce from that beneficiary, you have the option to name a new beneficiary, which is always an option as we discussed on the previous slide. Or you can rescind to straight life annuity. That means you can pop up to the highest paid annuity option for the rest of your lifetime. But when you pass away, it's not likely that there will be anything remaining in the account balance that would then be paid to in a lump sum to your beneficiary. Except for death or divorce of your beneficiary, you must continue with your elected joint and survivor option or ride out the term of your term certain option. Now let's turn our attention to the last two columns of your benefit estimate. These numbers are reflecting the partial lump sum. The partial lump sum is a one-time opportunity at your first retirement for you to have a one-time lump sum payment made from your account. What this means is that you can select an increment between 1 and 36 times your straight life annuity amount that will be paid to you approximately 90 days after your retirement date. In taking the partial lump sum, your account balance and lifetime monthly benefit will be permanently reduced based on the increment you chose. Partial lump sum can be paid to you directly, with 20% federal and 5% state tax taken right off the top from ASRS. If you are under the age of 59 and a half, the IRS could impose an additional 10% penalty on the gross amount of your partial lump sum when you file your taxes the next year. You can also roll this directly into an IRA or another eligible account, and in doing so, you would avoid those taxes and penalties until you withdraw from that account. Or you can do a combination of the two. Now, this is something that may not be for everyone, but sometimes people may decide that they want to take the money and pay off their credit cards or their mortgage, or maybe just take a great vacation. Just know that by doing so, you will be reducing your monthly pension for the rest of your life and your account balance. You can use the benefit estimator in your secure account to adjust the increments for additional estimates. If you still have questions or would like more detailed information on the annuity options, please check out our Annuity Options e-learning located under the Members tab, Retirement Annuity Options. This self-paced e-learning is available 24/7 to help you make the best possible retirement decision for you. We suggest taking this e-learning with your beneficiaries so you can make an informed decision. Now we're going to talk about some important things you consider before you retire. Creating your secure My ASRS account is an important step on your journey towards retirement. With this account, you have access to your contact information, beneficiary information, and secure messaging, as well as the ability to view or print your account statement, benefit estimates, and information release forms. That information release form is beneficial for people who will sometimes want their spouse or a friend to call in on their behalf. Without the information release form, we cannot give that person any information. Ultimately, the online account is the way that you will submit your retirement application, so you're going to want to familiarize yourself with it before then. For a list of all the things you can do, please see pages 28 and 29 in your Road to Retirement Guidebook. When thinking about what your retirement date should be, please note that your retirement date must be at least one day after your last day of work. This is because you cannot be an employee and a retiree on the same day. It does not matter if the date is a weekend or holiday. Also, you must submit your retirement application to the ASRS before that retirement date is over, as we cannot backdate any applications. We'll talk about how to do this and review that timeline more in just a little bit. You will definitely want to inform your employer when you plan on retiring. You also need to inform ASRS, and you do that by simply submitting the online retirement application. If you will be beginning to collect Social Security at that time, this is another entity you will want to contact to ensure you're taking all the proper steps necessary for that process to begin. If you are Medicare eligible, which is generally age 65, but could be earlier due to disability, that is yet another entity you will need to contact to learn about their process. There is no one-stop shop for retirement, so it's important for you to do your research and prepare. Fortunately, the ASRS has a wealth of information available to you to help answer your questions about your ASRS account. If you haven't already, we recommend browsing the Retirement Central tab on our public website. There is more information on supplementing ASRS retirement, timelines to consider, can you afford to retire, and much more. This is really a great way to stay on top of your retirement planning. Part of the application process is designating your tax withholdings. On the retirement application is where you will choose how you want your federal and/or state taxes withheld. The ASRS cannot advise you on taxes, but we do have some information for you. So what do you think? Your pension is taxable income. Is that true or false? Well, that is true. All states require income tax. What do you think? Is that true or false? That is false. Some states do not require income tax withheld, but ASRS does. So you'll need to know if you are moving out of state and check with a tax expert to find out if your pension is taxable. You control your withholdings. True or false? That is true. You do. You control your tax withholdings on your application when you're filing for your retirement, and then you also control it afterwards because you can change your withholdings online at any time. Your contributions are tax deferred, lowering your taxable income while employed. Your pension is paid from those tax deferred contributions, so it's liable for federal and possible state income tax. Arizona residents must pay Arizona state tax. Non-Arizona residents don't pay Arizona state tax, but may have to pay state tax in the state they reside. So again, consult a tax professional. For those of you who will continue to live in Arizona after retirement, there is a $2,500 state tax exclusion available when you file your taxes every year. The ASRS pension plan was never designed nor funded to include post-retirement increases. However, what can happen is a permanent benefit increase. In order to be eligible to receive a permanent benefit increase, your membership date had to have been prior to September 13th, 2013. Per statute, if the fund earns excess earnings defined in statute for a rolling 10-year period, a permanent benefit increase is possible for every eligible retiree at that time. Permanent benefit increase is not guaranteed and should not be anticipated or expected. The good news is, though, your pension will never decrease nor be taken away. For additional information, refer to pages 9 and 10 in the guidebook. Upon reaching retirement, members must research their options in order to make an informed decision about retiree health insurance for yourself and your dependents. There's a lot to consider with health insurance, so let's start with the basics. Who will provide your retiree health insurance? Maybe you are undecided, or maybe you plan to enroll with a private or other group plan. Maybe you plan to enroll with your employer's plan or COBRA. Or maybe you plan to enroll with the ASRS medical and dental plans. You may be able to enroll with your spouse. If they're still working, you could become a dependent on their plan. There are so many options to choose, and it's very important that you consider line by line every option that you're looking at. Make sure you're comparing apples to apples. There are some options mentioned for you to research about health insurance to help you make an informed decision. It's important to compare your income status before and after retirement. Think about your current earned income minus your taxes and insurance. While employed, your employer is paying towards your insurance premiums. After you retire, your income will already be a fraction of what it was while you were employed. Most employers will stop subsidizing your health insurance costs when you retire, leaving you to be responsible for the full cost of the insurance premiums. This makes quite an impact on your take-home income. You must also consider your Medicare status when choosing health insurance. Non-Medicare retiree health insurance is not federally funded like Medicare. Therefore, you'll want to be prepared to pay higher insurance costs. Please be aware that standard Medicare basically pays 80% of your medical costs. You are responsible for the remaining 20%. ASRS offers retiree medical and dental insurance plans. You become eligible for the plans at retirement. You will have opportunities to add or change coverage in the future. Dependent coverage for your spouse and children up to the age of 26 is available. ASRS provides Know Your Insurance meetings if you are interested in knowing about the ASRS medical and dental plans. At these meetings, whether it be webinars or in-person meetings, the vendors provide detailed information about plans, premiums, and more during the presentation. If you're interested in attending a Know Your Insurance meeting, webinar, or in-person meeting, plan to attend a meeting within the calendar year you plan to retire. To register for one of these meetings, log into your My ASRS Secure account and find a meeting date and time that fits your schedule. If you still have questions on the ASRS retiree health insurance options, please check out all the topics, including the Health Insurance Basics e-learning. Go to the Retirees tab, then Healthcare link. To view or print the ASRS Health Insurance Guide, click the Retirees tab and Healthcare link. Then go to the Health Plan link of choice, Medicare or non-Medicare plans. There you will find a link to the guide. Our health insurance enrollment guide is an all-in-one guide which includes both non-Medicare and Medicare information. It also includes the dental plan information. More detailed information is available on our healthcare page. You can view the on-demand videos that cover everything you need to know. These great resources are available 24/7, so you can watch them whenever it's convenient for you. Access the on-demand videos through our Retirees tab. Choose Healthcare and the medical or dental plan link of choice. ASRS offers the premium benefit program if you take health insurance through ASRS or your ASRS employer. The premium benefit is a monthly benefit available to our retirees to help offset the cost of retiree health insurance. The chart has the 3 criteria for the premium benefit, starting with whether or not you are Medicare eligible, your dependent status, and your years of service. For example, if you have 10 or more years of service at retirement, and you are not Medicare eligible, and you are covering a dependent, the premium benefit is $260 per month. If you have 7 years of service, you are Medicare eligible, and not covering a dependent, the premium benefit would be $70 a month. When you initially retire, if you don't choose one of ASRS plans or your employer plans or COBRA, you can always enroll in one of our plans every year during open enrollment or if you are experiencing a qualifying event. The premium benefit will automatically be given to you and added to your pension when you enroll in one of those plans. If you enroll in dental only, because you can enroll in medical only or dental only or both. But if you enroll in dental only, you are not entitled to the full $260 premium benefit if that is your eligibility. The premium benefit will never pay you more than the actual cost of your medical and or dental premiums. The premium benefit is available only if you receive your medical and or dental through the ASRS, your ASRS employer, or your ASRS employer's COBRA coverage. You would not be eligible to receive the premium benefit if your spouse is still working and you enroll in his or her as a dependent on their active employee insurance, or if you return to work with an ASRS employer and enroll in their active employee insurance, or if you enroll in a private health insurance plan. You can find more information on the premium benefit program on page 14 of your guidebook. The premium benefit stops when you pass away, but there's still a way to pass that premium benefit on to your dependent. This is called the optional premium benefit. It allows the premium benefit to continue to a surviving beneficiary when you pass away. The optional premium benefit provides a reduced benefit for the member at their retirement. The optional premium benefit is not available if you elect the straight life annuity option. You can choose to elect this on your retirement application as a one-time option, and you can opt out or cancel at any time. But once you cancel, you can never enroll in it again. To get an estimate on your premium benefit reduction, log into your My ASRS account and select More Options. Aside from health insurance, the ASRS offers 2 free discount programs to all our retirees and long-term disability recipients. There is a benefit that is available to all ASRS retirees and long-term disability recipients. It's called the Well Card. The Well Card provides discounts on many different services and is available to you and your household members as an ASRS retiree, even if you do not elect one of our insurance plans. The Well Card is not insurance. The Well Card provides discounts on many different services and is available to you and your household as an ASRS retiree. To get more information or to obtain a WellCard, go to the www.wellcardhealth.com website or view the ASRS Health Insurance Guide. That information is included in the guide. There's potential savings up to 50% on these different types of service. You just need to visit the WellCard website to locate participating providers and pharmacies to get the savings at the point of service. You cannot use the WellCard in conjunction with your health insurance. You have to choose one or the other. But this is a free benefit to all of our retirees and members of your household, even if you don't have one of our health or dental insurance plans. Well, are you getting excited? The next topic is Ready, Set, Retire, and I'm going to provide information about what you need to know upon reaching retirement. If you want to follow along in the guidebook, you'll need to go to page 6 to find the checklist. Now, once your date is set, you will need to know some important timelines. Your retirement application can be submitted up to 6 months in advance. Your health insurance enrollment form can be submitted up to 3 months in advance of your retirement date. But you have to have already submitted your retirement application in order to apply for the health insurance application. You must submit a month prior to the effective date, because effective dates for ASRS medical and dental insurance are the first of every month. You will also need to have your banking information, which is your account number, routing number, and the name of the banking institution, because your pension will be directly deposited. Please be sure to double and triple check your account numbers to avoid delays in receiving your pension. The online application is easy to do. You can submit your application up to 6 months prior to your retirement date. The latest to submit the online application is the day of retirement, though we do ask that you try to submit it at least a month prior to ensure that we have all the necessary paperwork in time. Simply log into your My ASRS Secure account and click on Retirement in the Apply Now section. There are easy to follow step-by-step instructions. Here's a quick video about our online retirement and just how easy it is.
Hello there! I retired a little while ago and thought the paperwork was going to be complicated and endless. Well, I was wrong. The ASRS has an online retirement process that made turning in my retirement application really simple. In fact, most ASRS retirement applications are filled out online these days because it's easy, fast, and convenient. It's also more secure and virtually error-free. All you need to do is log into your secure My ASRS account and check it out for yourself. Under Apply Now, click on Retirement to begin. The online application walked me through the entire process, providing step-by-step instructions and explanations. I didn't feel rushed and liked how I was able to save it and finish it at a later time. ASRS will hold your application for up to 30 days. You will receive a reminder email before it's erased. This allowed me to review sections and double-check my decisions. It even showed me how the different annuity options affected my monthly pension. When I was ready, I submitted it and printed a copy for myself, all at home, with no appointment, trips downtown, or to the post office. The best part was how ASRS kept me informed after I submitted my online application. I received emails and watched the status of my retirement move along in the pending status page of my account. I'm telling you, I was pleasantly surprised, and I bet you will be too. Go paperless, apply for your retirement online, then enjoy it. You've earned it.
Please know that once you submit your application, you will receive email notifications throughout the process. You'll get a notification indicating your completed retirement application was submitted and received by ASRS. You will also receive a notification to let you know when your pension calculation has been finalized. After your retirement date, the ASRS notifies your employer requesting your ending payroll verification. If your employer does not provide this to us in a timely manner, the ASRS will notify you so you can follow up with your employer. If you want to check the status of your retirement application, go to the Pending Request page in your My ASRS account under Apply Now. Now is the really exciting part. What should you expect after retirement? Most importantly, when should you expect to start receiving money? On page 3 of the Road to Retirement Guidebook, you're going to find post-retirement timelines there. Approximately 5 to 10 days after your retirement date, you can expect to receive your first estimated payment. An estimated payment is similar to a cash advance. Estimated payments are designated to tide you over until you receive your first regular pension payment. You may receive up to 3 estimated payments while your first regular pension payment is being processed. Your regular retroactive pension payment will take anywhere from 45 to 90 days to process. If you elected a partial lump sum, it will take up to 90 days to process. After you get your first regular pension payment, expect to receive that payment on or around the first of the month, every month. If the first falls on a weekend or a holiday, you will be receiving that payment on the business day prior to the first. January would be the exception. In January, you can always expect to receive your pension by the 2nd, 3rd, or 4th, depending on when your bank releases it. The ASRS requires a full calendar month for processing of your pension. If you retire on the first day of the month, then that same month will be your processing month. In this example, the retirement date is December 1st. The processing month will be December. This member would receive an estimated payment 5 to 10 days after December 1st and should have their first pension payment by mid-January. This is the retroactive pension payment. This would include all of January and December minus the estimated payment. It is important for you to know that during the higher volume seasons, which are May, June, July, and August, that's when ASRS receives an excessive amount of retirement requests and applications. So it can take up to 90 days to process. Your first regular pension payment will then occur February 1st, as in this example. After this, you can expect your pension payment on or around the 1st of every month for the rest of your life. Now let's take a look at another example, because not everyone is going to be retiring on the 1st of the month. If a member retires on any day other than the 1st, then the processing month is the following month. So this member is retiring August 12th. So the processing month will be September. Now this member will receive their first estimated payment within 5 to 10 business days of the 12th of August. They will receive their retroactive pension payment in October, which will include October's pension payment and any additional funds owed from the previous 2 months' estimated payments. And then the following month, your first regular pension payment is received on the 1st. Please notice that on the bottom, again, that means that during the time periods when ASRS is receiving an excessive number of requests, the processing time can take up to 90 days. Your My ASRS Secure account will be used after you retire. As a retiree, make necessary updates and changes to contact information. You can change your direct deposit information, and also you can change your tax withholdings and more. Go to your My ASRS Secure account to view or print monthly payment history, pension verification letters, and forms. Also, if you need to contact the ASRS, you may send a message via secure messaging. Contacting the ASRS by secure messaging is easy. You can use secure messaging to ask questions and send documents. You can learn about this form of communication by accessing the Members tab on the ASRS homepage and clicking Member Videos and choose the video called Member Secure Messaging. This will walk you through the steps on how to submit a secure message. Stay informed by visiting the ASRS website. There is a wealth of information on our website, such as guides, newsletters, publications, and many other helpful resources to help keep you informed and up to date. Are you planning on working after your retirement? For those of you who are planning to return to work for an ASRS employer, there are some very specific guidelines for you that can be found on the ASRS website. Many of you may be planning to return to work after retirement. So if you're planning to go back to work in the private sector or moving out of state, it will not affect your pension. However, if you are planning to go back to an ASRS employer, there are guidelines and restrictions that apply. Please go online and view our Working After Retirement e-learning to help guide you through the process. If working after retirement for an ASRS employer, you must log into your My ASRS account and complete the Working After Retirement online form. We covered a lot of information. We have a variety of videos and e-learnings available on our website 24/7. If you want to review the different annuity options, health insurance enrollment guides, and other topics, please refer to the videos and e-learnings available to you in the Members tab and throughout our website. You have completed Route 4 Next Exit Retirement. Please know ASRS is here for you every step of the way throughout your retirement journey. Thank you for your service to the state of Arizona.